Violence continues to escalate between Israel and Iran. There is speculation the U.S. could enter the conflict. Our guest says we could see oil hitting $80 U.S. as this situation gets worse. Let's bring in Andrew Lipow, president of Lipow Oil Associates. Andrew, great to see you. What is your impression over the past 24 hours? Has the threat to oil supplies changed? Has it increased or decreased?
Well, good afternoon, Andrew, and thanks for having me. I think the situation has changed a little bit today. We saw early this morning oil prices up over $2 a barrel. And then after the president's news conference, his spokesman said that Trump was actually delaying any decision for another 2 weeks. We saw the oil market sell off. I think there's a great concern on the administration's part of the ramifications of hitting the nuclear sites in Iran and what that could mean as far as American forces in the area and a widening of the conflict. So it seems that at least over the next 2 weeks, the president has taken off the table for the moment the U.S. getting directly involved, and that has eased some of the geopolitical tensions, at least in the oil market.
I mean, it's very hard to know what goes on in the councils of the Israeli military, but they know they could hurt Iran economically by devastating oil exports, or they could try to, but would they be likely to do that?
Well, I think that they would be unlikely to do that, given that damaging Iranian oil exports may result in Iran taking measures to either sink tankers in the Strait of Hormuz, mine the waterway, or try to seek other ways to close it, inflicting economic pain not only on Iran, but its neighbors, as well as the U.S. So I think for the moment that the Iranian oil export facilities are probably going to be safe, if you will, from Israeli missiles. However, having said that, given the issues that we are seeing in the Strait, including electronic jamming of navigation systems. There was a collision between 2 oil tankers last week. What you are seeing is a number of vessel owners are really not chartering out their vessels to go into that area, and that is something that could limit oil supplies indirectly.
And yeah, that would really raise the heat, wouldn't it, if the Iranians were to distort the global oil market, pushing up prices. What about LNG, Andrew? It's a similar story, really, isn't it? The Strait of Hormuz is a choke point for much of the world's LNG shipments.
Well, that's correct, especially for Qatar, which is exporting over 10 billion cubic feet per day of LNG. You can compare that to the U.S.'s, who is about 12 or a little bit greater. So there are significant ramifications in the loss of supply of Qatari LNG, especially into the Asian and European markets.
And Europe already apparently seeing the impact of higher gas prices. Andrew, remind us, though, if we can exclude the conflict for now, is the global oil market well supplied, broadly speaking?
I think it is, and one thing to keep in mind is this recent conflict has not resulted in any supply disruption other than the fear of a supply disruption. We have seen since April, OPEC Plus has returned nearly 1.4 million barrels a day of oil from its voluntary production cuts that they instituted several years ago. That amount of oil is about equal to the amount of oil that Iran has been exporting. So the loss of Iranian oil exports could be made up with those increases in production, as well as the release of strategic stocks, whether it be in the European Union or the United States or elsewhere.
It is interesting, domestically in the U.S., oil is a very visible component of inflation when gasoline prices go up. And we have seen, maybe we could look at a one-year chart for oil. This tends to push up the price of motoring in the United States. And of course, voters don't like that. And the Fed is probably going to be well aware.
I think this is a big issue for the administration politically with the consumer. Since the end of May, we've seen crude oil prices rise about 23%. Gasoline prices a little bit less, 13%, but that equates to 28 cents a gallon. But the biggest increase has been on diesel prices, which have risen 58 cents a gallon in the futures market since the end of May. And of course, that translates into higher prices for all the goods and services that are delivered to the consumer.
The fact that China is the dominant buyer of Iranian oil, does that factor into the situation at all in terms of potential disruption? I mean, I guess the Chinese, if they weren't getting Iranian oil, they'd have to go elsewhere.
Well, that's exactly right. The Chinese have been noticeably silent about this conflict. They are the biggest buyer of Iranian oil. They would have to seek other sources, but perhaps the increase in the OPEC plus production will, ease their fears about losing Iranian supply. However, Iranian oil is significantly discounted to get it sold into the Chinese economy.
It's interesting. Israel has shut down natural gas production after Iranian attacks. I don't know if Iran has actually gone after natural gas. They have aimed at a refinery, at least one in Israel. But is Israel a significant producer of natural gas these days, Andrew?
Well, it's actually quite small when you compare it to the United States, but for the local economy, it has big ramifications, as they've shut down 2 of the 3 offshore natural gas producing facilities. And over the years, they've integrated that natural gas supply with the economies of Egypt as well as Jordan. So you have a very localized economy that is dependent on natural gas. The same can be said about the missile attacks on the Haifa refinery, which is Israel's largest refinery. When that facility shut down due to the loss of power, Israel has to go into the market and buy gasoline and diesel and therefore import it.
Yeah, it's interesting. And just on choke points, the Strait of Hormuz, something like 20 million barrels of oil every single day, about a fifth of world consumption going through that one choke point. It's interesting how the world is vulnerable to these narrow gateways in some cases.
Yeah, this is the biggest issue that's facing the oil market, because the oil market is connected on a global basis, whether it's exports out of the U.S. or exports through the Strait of Hormuz. And time again, we've seen that geopolitical tensions ratchet up the price of oil in the short term, because the oil market is saying, buy now and then let's see what happens.